Welcome to today's market report. European stock markets are set to open higher on Monday, with investors looking at the possibility of more stimulus as the new earnings season kicks off. At 7 o'clock this morning, the DAX futures contract in Germany traded 0.1% higher. CAC 40 futures in France were up 1.4%, while FTSE 100 futures contract in the UK rose 0.6%. Stock markets around the globe have bounced strongly since the depths of March, helped by better-than-expected economic data and large levels of fiscal and monetary aid from central banks and governments alike. However, the durability of this recovery has been put in doubt by the resurgence of COVID-19 virus. The World Health Organization reported a record of 230,317 new cases in 24 hours on Sunday, with the U.S. state of Florida reporting an increase of more than 15,000 new cases in 24 hours, a record for any state, surpassing the peak hit by New York in April. With this in mind, attention this week will focus on the European Central Bank meeting on Thursday and then the get-together of European Union leaders on July 17th to 18th to discuss, among other things, the proposed €750 billion recovery fund for economies hit the hardest by COVID-19. Helping Monday's positive tone was the decision of Fitch rating agency late Friday to confirm Italy's credit rating with a stable outlook. Fitch clearly indicated that ECB's PEPP is a key driver for the low financing costs and, as such, also a backstop for the fiscal position, said analysts at Danske Bank. The US corporate earnings season will start this week, with Europe to follow in earnest next week, providing another window to assess the scale of the damage as well as the recovery from the pandemic. There is little economic data of note due on Monday, while in corporate news, Credit Suisse could cut hundreds of jobs as part of a new savings program. While bank shares rose sharply on Friday, they have been badly lagging technology stocks, with analysts at Bank of America noting tech outperformance in the past 6 months was greatest since the 1999 tech bubble and the 2008 global financial crisis. If the S&P was just tech, healthcare, Amazon, Google, the index would now be 4,173, they wrote in a note, way above the current level of 3,185. If made up of anything else, it would be 2,924. It is also added, and central banks are crushing rate expectations, forcing risk-taking in credit markets. Oil prices eased early trade, although that followed a sharp rise on Friday when the International Energy Agency bumped up its 2020 demand forecast. Brent crude futures dipped 22 cents to $43 a barrel, while US crude lost 24 cents to $40.31. Gold futures this morning rose 0.5% to $1,810. On the FX front, GBP/USD takes the bid near 126.55, up 0.27% on a day, while heading into London Open on Monday. While broad US dollar weakness could be considered as the key reason for the cable's latest upside, hopes of another stimulus from the UK and efforts to tame the coronavirus favour the bulls. Even so, traders await a speech by the Bank of England Governor Andrew Bailey and British Home Secretary Priti Patel for fresh impetus. Rishi Sunak isn't yet tired of inflating the government's push to hike the demand, following his last week's multi-billion pounds of the package. The Chancellor is anticipated, as per the UK Telegraph, to introduce sweeping tax cuts and an overhaul of planning laws in up to 10 new free ports within a year of the UK becoming fully independent from the European Union in December. Furthermore, news that cross-party group of politicians will analyse the country's pandemic situation and help overcome the crisis also offered a ray of hope to the pair traders. The euro-dollar is fast closing on the 200-week simple moving average hurdle at 113.33, whilst the dollar index slipped 0.2% to 96.452. This is today's market news. Thanks for listening. We'll see you next time.